Welcome back to Fast Market here on the Schwab Network. Markets had all session highs here today. Trump giving some comments before he got on a plane about there was a meeting this morning with China, maybe that giving some optimism to markets, and talking about the NATO and their alliance, stating that not as powerful without the U.S., of course. We're the biggest contributor to NATO. So, yeah, stating the obvious there. All right, let's get into a discussion about Target for our cash tag segment. For that, we're going to bring in our next guest. That's going to be Landon Swan, co-founder of LikeFolio. Welcome back to the show, Landon.
Thanks. It's great to be here.
All right, Target, we've kind of focused a little bit on the early segment of the show on the consumer. It seems like that seems to be the crutch here in markets at this point, that consumer sentiment data, confidence numbers are really low. The soft data is really low at this point. Are you guys seeing anything out of Target or maybe any of the other retailers that might signal otherwise?
Yeah, I mean, when we look at Target, we always like to look at how things have changed, right, since last time. And, we know that foot traffic's down about 6 or 7%, but web visits are actually up nearly 20% now. That sounds like a big number, but you got to remember that's comparison, and it was a very low bar. I mean, Target struggled significantly, about a year ago, and they're kind of coming out of that. I think this is, we're starting to see signs of the bleeding is slowing a little bit. They got themselves into hot water in 2023, getting political with Pride Month and some other stuff and DEI hires, and then now recently they've walked that back. So in 2023 they made one side of the country mad, and now they're walking that back and they're kind of making the other side of the country mad, and it's just like, just shut up and run your business. Stop getting into stuff. That's my advice to every CEO out there. Just do what's right for your business, but be quiet about it. And so now they keep bouncing back and forth. But we are starting to see some signs of, again, stopping the bleeding. And that's that top bar of this chart. I mean, that's a significant number compared to some of those others. It's off of a low, so it's kind of sandbag numbers. But we're also seeing some, we're seeing effort from them. They had that Target Circle week in March. That was a pop in interest. I will say on the partnership side, it's a bad sign that Ulta paused the expansion, citing that they're starting to lose market share. Almost saying without saying that maybe the Target partnership was a little bit toxic for them, for their brand, like it hurt their brand to be associated with Target, which is obviously not what you want to have, companies thinking. But they got the Kate Spade collaboration. They've got a new Kardashian high protein popcorn coming out. They're working on partnerships and collaborations, and they're trying to leverage that like they did with Ulta. But hopefully that'll be a success later. It's tough with the consumer. Everyone's worried about a potential recession, tariffs, interest rates, and inflation. It's all in the mind of the consumer, and spending is decreasing. And Target's a little bit more of a discretionary buy for most consumers rather than staples. You can, Walmart's more in that staples category, but Target has both. But it is a little bit more of the money that you don't have to spend, and if you don't have to spend it, maybe you don't spend it. Between the data of decreased foot traffic and increased web visits, maybe people are starting to shop at home from Target, or maybe that web visits data was just so low that they had to beat it. Now, when you look at this stock price, that is quite the fall. That last earnings report, that vertical drop there that you can see, it bounced back a little bit, and I think investors were hoping, okay, that's over now. But no, it just turned right back down. Now we're down to 94. So there is so much negativity priced into this. We're starting to get to the point of everything bad being priced in. And so for us to see some data that web visits are turning around, the bleeding has stopped, this could be, it could be near the bottom. It's tough to catch a falling knife anytime, especially with a company that seems to enjoy shooting itself in the foot. You got to be careful with this one. But if the data does start to turn around, people will still go to this store if they have something they want. We're looking at the consumer mentions, and it is filled with people going to Target because they want the Nintendo Switch 2. And they don't really care about all the other stuff. They want their product, so they're going to where they can buy their product. So that's going to drive consumers, and as long as they can keep their mouth shut, stay out of politics, people will just say, you know what, I need something, Target has it, I'm buying it from Target. That's the model for this business. If they can get into that, get back to that, then I think we're getting close to a potential bottom here in Target if the economy can hold on, which obviously is a big if.
So Landon, you put out a lot there, right? From a valuation standpoint, maybe some of the hurdles that they're having, maybe even some market share that they're giving up to competitors. If you are going to compare, and I'll just put you on the spot, Costco, Walmart, or even an Amazon for that matter, and a Target, do you think Target is still the best value play from an equity standpoint out of all of the three, or is that something that's going a little bit too far just based on some of the data that you're seeing right now?
Yeah, too far. Of all those, I've said it before, I think Amazon is just, it's jumping out at me as far as evaluation. I know they have just as much or probably more exposure to the tariff side of things, but they're just such a behemoth that even if some of that happens and it stays, I think they're going to be able to figure it out. So it's not Target. If I had to pick a second place, I'd probably put Walmart above Target. So if Target can hold on, and like I said, show that the consumers are willing to go back. We've got that data on the web visits. If they can just hold on at these levels, or even if the stock drops a little bit more, that they get more and more appealing over time. But they've got to show, a quarter or two of just focused growth where they're just back to business and just executing. And I think that, again, the consumer is going to forget about all the problems of the past if they have the product. And so this chart is giving me hope that Target is in that direction. Now, normally you see a chart like this and you say, okay, you got to get that company on top. Look at that number. Right. But remember that this is year over year. So it's all about how low last year was more than how great this year is. It's bouncing, yes. But it's not rocketing, even though this chart shows that. So it's really about that low bar that they set last year. So I'd need to see this sustain for maybe another quarter or two before I'd start putting Target in that category.
So looking at this, they don't have earnings for a few weeks here, Landon. I mean, you look at this longer term, maybe that sets up better for you guys when you look at something like this, that, hey, stay out of the headlines and then just do your job.
Yeah, I think so. I mean, if they were reporting today, I think they report May 21st. If they were reporting today, I looked, our score's plus 23. And that largely is due to the fact that the bleeding has stopped on the consumer side of things. People are going back to shopping there, and the stock is way, way down, right? So it's on the positive side of things. If I had to place a bet, I would definitely place a bet to the bullish side. But if you're asking me where I'm investing long term, I'm going to wait a little bit on Target. I want to see that they're going to continue to execute because, again, they have some self-inflicted wounds. Like a company like Amazon, they're innovating, they're doing their best, Walmart as well, but they're not shooting themselves in the foot. Target continues to do that. If they stop, then okay, great. They got the message, just run your business. Then I'll be more confident. But I fear investing in a company that any day now might come out with some headline that, alienates half the U.S. And it's just like, just don't do that.
Yeah.
Long term, I'm more into Amazon and Walmart, but short term, I would trade Target. If this data holds for a month, I'd be trading Target on the bullish side for the earnings report.
Yeah, Target down 43% over the last 12 months. Walmart up 62% over the last 12 months. So a little bit of a divergence there. All right, great stuff as always, Landon. Appreciate it.
Thanks, guys.
All right, that's Landon Swan, co-founder of LikeFolio, breaking it down for us. KG, you look at this.